Thank you for joining our presentation today on extended care solutions. Linked benefit products, which combine life insurance with long-term care or chronic care coverage, have been around for many years. But in the past several years, we've seen carriers introduce more and more products to this market. Now, most DBS carriers offer some type of linked benefit solution. With so many options available, it can be hard to decipher which solution is best for your client. This is where DBS comes in. Our case designers are your product experts when it comes to life insurance and linked benefit solutions. We have created many tools to assist advisors in understanding various product features, so you are fully equipped to explain these products to your client. Today we'll review the importance of planning for a long-term care or chronic care event, discuss ways to help engage your clients in these important decisions, and review a few sample case studies. Let's begin. Please review the important information about our presentation today. We would like to start with a little about DBS so you understand who we are at a high level. We are a full-service BGA, brokerage general agency, with widespread industry leadership and a very talented team of experts. Additionally, we're a family-owned business with over 50 years of experience. Our singular goal is making it easier and more efficient for you to process your life insurance business. America continues to be underinsured for long-term care. In fact, only 10% of Americans have long-term care coverage. Why aren't more people covered? One reason might be because clients have a misconception as to what long-term care really is. People's perceptions often prevent them from thinking positively about purchasing long-term care coverage. They don't think they will be the one to need it, or they think the government will pay for it. They may believe they can pay for long-term care themselves, or simply fear that it's too expensive or too complicated, or that they won't get anything back if they never need care. Other people worry about premium hikes and don't want to purchase a product with no guarantee that the premium will remain what they see as reasonable in cost. Many of the worries people have center around the financial aspects. Like home or auto insurance, there has to be a loss before benefits are paid, so they worry they won't get any return if all goes well. They see it that they have to lose to win, because they have to be in need of care for the policy to pay, and that is not always easy to think about. So, what do we need to know to help clients overcome the hurdles towards a purchase of long-term care coverage? How you approach your client about long-term care is very important to understand. When bringing up the subject, the wrong opening can immediately end the discussion. One obstacle is actually using the words long-term care, because for many people it means nursing home. Hearing it is enough to abruptly end the discussion. When starting the dialogue, try to avoid the term long-term care for as long as possible. Further, most clients would prefer to receive care in home. Currently, 52% of long-term care claims are for home health care. So the good news is that home health care is likely how care will be received, not a nursing home. Your discussion with clients will have a better start if you position the need for long-term care as providing funds to keep the client in their home as long as possible should they no longer be able to take care of themselves. People like to hear about staying in their home. More good news is that another 20% will likely receive care in assisted living. You may be surprised to find out that only 28% of people needing long-term care actually receive care in a nursing home, and that includes the 38% there rehabilitating from a condition that will result in full recovery or the ability to continue care back at home. Claims continue to change in length and scope. Claims that last 1 year will average a claim period of 3.9 years. And while it was once believed that once someone was on claim, they would likely not recover, we find today that about 25% of claims end in recovery. We hear a lot of statistics, including the one from the U.S. Department of Health and Human Services, stating that if you live to age 65, there will be a 70% chance you will need some type of long-term care services. But how does that translate to one individual, your client? Keep in mind that people generally don't respond well to statistics because they don't associate themselves as part of a risk pool. They want to believe they will be the other guy, so in their reality, the chance of needing long-term care is either 0% or 100%. In other words, that person will either need it or not need it, and nobody can predict which destiny they'll fall into. People want to believe they won't need long-term care, but what if your client is wrong and they fall into the 100% category and need care? How will it be paid for? Next, we'll discuss the options for paying for long-term care services. There are generally 3 ways to pay for LTC services. 1. First, there's lifestyle. The cost of paying this way is the potential loss of health, well-being, and/or earning ability of a spouse or other loved one providing care. 2. Second, there's income, which is a dollar-for-dollar expenditure of your money and could impact a spouse financially by reducing funds for living expenses and their desired lifestyle, or require a depletion of assets to supplement what income won't pay. 3. Finally, we've got insurance, the most cost-efficient way to pay for care, since you are using leveraged dollars to pay for care expenses. When lifestyle pays for care, the cost is the impact on the unpaid caregiver. Seniors who give care are more likely to be seniors themselves who also need care, and 40% of senior caregivers predecease the person they are caring for. The average unpaid caregiver is a middle-aged woman who works full-time or used to work full-time, but ultimately loses an average of $324,000 in lost wages and benefits due to having to quit their job, reduce their work hours, or pass up promotions. There is also an impact to family life as well. The adult child who is the primary caregiver ends up losing precious time with their own family. Who's most likely to purchase long-term care coverage? The typical buyer is between 50 and 64, with 92% of buyers under the age of 64. They'll also likely be married with adult children, own their own home, and usually they'll work in a white-collar profession and have not retired yet. In addition, they tend to be planners and own life insurance as well as some other conservative investments. Household income is generally $100,000 per year or more. It's important to note that people who have experienced the challenges of long-term care with a relative are also more open to discussing their own needs. While purchasers of long-term care are not limited to these guidelines, it is a good place to start when determining good candidates for a long-term care discussion. When it comes to gender, women are more open to purchasing long-term care than a man. If you look at traditional long-term care sales, you will find that 2/3 of purchasers are women. Though when you look at life and long-term care combos, the rise in sales to men is significant. Why the difference? Statistically, men are more willing to purchase long-term care protection when a death benefit is part of the plan. These products can guarantee a payout, which is far more appealing to a man than something which pays nothing if never used unless it has return of premium. Also, the actual internal rate of return may be appealing, helping them over the hurdle of believing they're wasting money or could earn enough on an investment to cover the cost of care. Unfortunately, there are a lot of misconceptions on how long-term care is funded. Many people think they can just self-insure, but this is affordable only to the wealthy, and it usually isn't cost-efficient even for this group. Medicaid is a welfare program, not for the general public, and eligibility revolves around requirements of having low income and countable assets. Further, in most communities, it only pays for nursing home care. Medicare is a temporary solution. It's free for the first 20 days, but then requires a substantial copay for days 21 to 100, and that assumes they've met the even more difficult qualifications. Traditional health insurance simply doesn't cover long-term care, and while some Medigap policies will cover the Medicare copay, it doesn't cover LTC costs. As for insurance options, there are several. Standalone policies offer the most flexibility of options, but bring the risk of rate increases. In addition, if you don't use the LTC benefit, there is no monetary benefit. While a return of premium option may be available, it is quite expensive and may not be practical. Life LTC hybrid products are another option. The primary purpose of this product is long-term care protection, but a death benefit component is part of the plan that provides cost recovery of premium. The third option is life insurance with a long-term care or chronic care rider. This provides a pool of money that can be used for either long-term care claims or as a death benefit. Any money not used for long-term care will go to the beneficiary as a federal income tax-free death benefit. DBS breaks linked benefit products into two separate categories. The first is life insurance with a long-term care or chronic care rider, and the second is the Life LTC hybrid solutions. Let's review each type. Life insurance with a long-term care or chronic care rider is for people with a life insurance need, but who also have long-term care or chronic care concerns. The death benefit can be accelerated for long-term care or chronic care benefits, but if the rider is never needed, the remaining death benefit will be paid to the beneficiary. Some solutions guarantee both premiums and death benefits, while some plans include cash value growth potential, or both. These plans also offer ultimate premium flexibility, so the payment plan can be customized to best meet your client's needs. This solution provides the best leverage of death benefit, but will usually provide the least in long-term care benefits. Life LTC hybrid policies are for people whose primary need is long-term care, but want cost recovery if long-term care is little or never needed. This policy has a death benefit that is guaranteed to be at least equal to or better than the premium paid. The death benefit will not enjoy the same leverage as a death benefit on life insurance with a rider, but it will always, at the very least, provide cost recovery of premiums paid if long-term care benefits are not needed. These policies can be purchased with a single premium or with premium payment schedules up to age 65. Plans often include a guaranteed return of premium feature as well. In order to qualify for long-term care or chronic care benefits, carriers will require that a licensed healthcare practitioner certifies there is cognitive impairment, or that the insured is unable to perform 2 or more activities of daily living, and the condition is likely to last 90 days or longer. In addition, the insurance company may have an elimination period, which is a period after the claim is filed that the insured must pay their own bills. These periods vary among insurance companies, but typically are from 0 to 100 days. Some older versions of chronic care riders may require that your client be permanently impaired in order to qualify for benefits, but newer versions have eliminated this permanency requirement. Ask your DBS case designer for further details. Next, we'll review a few important features that may be present on some of the products available to you through DBS. Insurers, consumer groups, and policymakers have come to understand the importance of making policies more affordable and more desirable to a broader spectrum of the aged and non-aged population. Life LTC hybrid products are now offering payments up to age 65 versus the single premium-only plans available in the past. Adding a long-term care or chronic care rider offers even more premium flexibility, with the option to pay via a single premium or even monthly payments for life. These options have allowed more consumers access to the long-term care and chronic care coverage they need. Many baby boomers dream of retiring abroad. In fact, the number of Social Security recipients already living that retirement dream outside the U.S. increased 50% from 2003 to 2013. And shows little sign of slowing. But if your clients decide to retire abroad, will the coverage they purchased leave the country with them? A lot of plans have full or partial benefits for those needing care outside the United States. Your dedicated DBS case designer can discuss these important differences with you. Many individuals and their families prefer to arrange for and manage their own long-term care services. Navigating the world of caregivers and facilities can be difficult, especially during a stressful time. But many products offer care assistance programs that allow access to care management professionals that can support your clients and their loved ones. Some carriers even offer protection against lapse during an active long-term care or chronic care claim. This is different from a true waiver of premium feature found on many life insurance policies. If your client comes off claim, they may have to resume paying premiums or even pay back catch-up premiums to cover the period while on claim. Please be sure to review these important details with your DBS case designer. Here is a hypothetical example of a Life LTC hybrid product, which combines life insurance and long-term care insurance. Please remember, while the client needs to demonstrate a life insurance need, the primary protection leverage is in the long-term care benefit. In our example, we're showing the purchasing power of a $100,000 single premium for a female age 55. As you can see, the total long-term care pool is $520,000. That is over 5 times leverage for the premium paid. Additionally, the policy includes a $173,000 death benefit, which is available if the client never uses the policy for long-term care. Clients like that these policies offer features somewhat similar to standalone long-term care, such as inflation options and choices of longer benefit periods, which vary by company but generally are from 2 to 8 years. Clients also find the return of premium feature to the policy owner attractive. If the policy owner has a change of heart down the road, the premium can be returned with no surrender charge. This feature varies by company, the amount returned, and may be immediate or after a period of time, such as 5 years. These products are for clients who have the ability to pay larger premiums or reposition an asset, as premium schedules are limited from single pay up to 10 years, with some products now offering payment plans to age 65. Next, here's a case study that utilizes a long-term care or chronic illness rider. Dan is 55 years old, married with 3 children, and in exceptional health. Concerned about funding an extended LTC need if it arose in the near term, Dan also wants a strategy that addresses a need that may not occur for many years. He has an existing life insurance policy with a $500,000 face amount, $45,000 of net cash value, and is currently paying $400 per month. As you can see, there are several options available for changing his current coverage. He has the opportunity to lower his existing premiums by up to $132 per month, obtain an insurance policy that allows him to accelerate the death benefit for a qualifying care expense, provide him the peace of mind in knowing that he has some coverage against a future care expense, and even if this doesn't occur, his death benefit will be passed along to his beneficiaries. A tip from DBS: even if the new policies you are presenting to your clients have a slightly higher premium, remember that you are offering your client an important upgrade from their existing insurance policy, as the new policy offers benefits for long-term care or chronic illness. Also, be sure to complete a review of your client's existing life insurance by ordering an in-force illustration from the existing carrier. The policy purchased initially was most likely an excellent product and well-suited for the time, but over the past decade, interest rates and divided scales on life insurance have steadily declined, hitting historic lows in recent years. This has critically impacted policy performance, and initial goals are falling well short of expectations. Policies originally thought to be paid up are requiring additional premiums, and worst case, policies are lapsing. More importantly, if your client still has a substantial death benefit need, it may be important to increase his or her life insurance coverage amount. Any death benefit used for long-term care or chronic care expenses will reduce the life insurance death benefit. Your DBS case designer has many tools available to assist you in understanding the various options for your clients. This handy reference puts all the options into a one-page summary, making it much easier to identify which solution may best suit your client's needs. The grid includes all combination products available through DBS and places them into 4 categories. The first section shows the Life LTC hybrid products available, and the lighter blue section contains the long-term care riders available. These are all classified under Section 7702B of the Internal Revenue Code, and can be marketed as providing long-term care benefits. The third section, which is the lightest blue, shows the chronic illness riders filed under Section 101G of the Internal Revenue Code. These products cannot be marketed, either verbally or in writing, as long-term care coverage. In the past, all 101G chronic illness riders only covered individuals declared permanently impaired, where the impairment was expected to last for the rest of his or her lifetime. However, it is important to note that in December 2014, the standard for chronic illness riders was revised to include the option of paying temporary claims. DBS now has several carriers whose 101G chronic illness riders will cover both temporary and permanent impairments. The last section, which is the gray section, shows the products filed under 101G chronic illness, but whose claim benefit includes a discount. Contact us to receive a copy of this grid, which is updated regularly. Shown here are just a few resources available to you through DBS. We have an entire section of our website dedicated to linked benefits where you can find help with having the LTC conversation with your clients, choosing which product options might be best for your client situations, the difference between a long-term care and chronic illness rider, options for paying for long-term care, overcoming client objections, determining the cost of care with our interactive calculator. Contact us if you don't have website access. Call the DBS Case Design team today to learn more about the products and solutions available for your clients.